Hello, guys. We have to talk. We have to talk about two things, in my opinion, here. Well, it's one thing, but we have to talk energy. Um, Again, I made a long call on nat gas at roughly $3. That is still, in my opinion, going to like $6 at least. And now we're seeing oil as well, doing amazing stuff here, really. Very, very close to that big 77 breakout. Horizontally, you have a massive level. You have the 4-year wedge pattern, and it really looks like it's going to break out. And when you have a chart that has been consolidating heavily, heavily, heavily in a triangle for 4 years, when it breaks out or breaks down, it's going to do big moves in that direction. So let's look at it here. I will do a lot of charts for the weekend in energy. Um, a lot of the charts has actually performed okay, given the fact that oil hasn't been doing anything for 4 years. And again, there are some setups that, again, they pay a hefty dividend. I will be releasing that during the weekend um, for the subscribers, for you guys, so you can see that and take advantage of it. I will find the best ones out there, and I will let you know what the setup is, what the potential targets, pitfalls, all that good stuff. So let's dive straight in here. I did talk about this yesterday actually with Andy from Finding Value Finance. I don't know if it has been released already. I think it has. Usually he releases them pretty quickly. But yeah, again, 77 on the USD WGI is the magic one. We will go through that in a bit here. And yeah, again, I'm just going to show you two posts here that I just did on X. Again, follow me here if you want to get the updates. It is, again, here, again, hey, Houston, we need to create a new crisis, or oil is going to pop big time. Uh, Sitting right there at the wedge pattern, again, what a typo that is, uh, and the big 77 level. If so, inflation will be the name of the game in 12 months' time. And let's look at it. I will actually want to do, no, let's do oil first. Oil is the most important one. The good old oil chart here, zooming out. Again, we haven't been breaking yet. It looks like it wants to, not gonna lie here, but I need the confirmation, 77. I said 77 for a long time. And we're going to look at the past 20 years of this chart here. Again, the dot-com bubble here, crisis heavily, just completely dumping from like 150 down to like $33. Then you have the reflation, and then again triangle. Again, look at. I want to remove the circles here if that is okay with you. Look at the setup here as well. Similar, but with a difference. I will let you know why. You had that rising wedge pattern here, consolidating here from 2011 till 14, massive breakdown, and you went from roughly 110 down to $26. Then again here, we had the little reflation, and look what we have over here. We have the the head and shoulders pattern here. You can see there, right there, left shoulder, head, right shoulder, and boom, game over. What happened there in 2020. And the three impulses here, you have the first one, you have the second, you have the third. The measured move, by the way, on that last head and shoulders pattern is roughly something like this. So we broke there at roughly 50, and the target was actually the low over here, again at 25. We overshot heavily, again, oil going negative, all that good stuff. And then we popped straight back up again, coming all the way up to the other side there. And then we actually tested twice, and then we rallied, and that was our peak. That was our peak, 130. So again, the reason why I say this is a bit different, these two are quite similar. Not similar 100%, but they have, similar patterns. The thing is here, again, is that we're actually hovering above what's that, like a 15-year long trend line right there. Hovering, consolidating above, that is always a a good thing to see that you're hoovering there. We do still have this little, danger that again we can't have that topping pattern there. But right now, sitting at the gates at 77, it sure doesn't look like we're gonna get that at this moment in time, really. It really doesn't. So also the monthly here, again, the alignment here, the monthly, the 20 monthly moving average, 77. I mean, that is just such a big level. Um, whew, that is just incredible. Anywho, anywho, so we're zooming in here just for like 4 years time. So we peaked in March 2022, and everyone was blaming, Putin here. The war started right there on that green candle, and we basically went from like 90 to like 130, and everyone was blaming Putin, for the higher prices. But again, prior to that, look how far we came, right? I mean, oil basically went from $0 to like 100, and then we had that blow off top there, and actually we had a textbook. We had the blow off top here. You have the bear flag, and you are game over. You can see this pattern on the platinum as well. Very similar setup there for the platinum chart. So right now here again, you could also argue that you have a head and shoulders pattern here, not textbook by any means whatsoever. But yeah, look at where we are right here, right now, sitting at the gates of the 3 year triangle upper trend line here, squeezed for an eternity, especially the past, 2 years from basically the start of 2023. We have basically gone sideways, right? This is the pinch coming in, and it definitely looks like it wants to break. Um, the members and I were looking at this little break here to the upside, getting above that 71.5 is the first, little, signs that we could potentially be breaking here. And we have been rallying, and we are sitting right there at this moment in time on the daily for oil, right there. Let's see how it ends. But yeah, this is again, if it breaks to the upside and starts to rally energy, of course, in this case, oil, and the companies, in that sector will be one of the best investments for, I think, if this is like a 3 year one, we could have 2 years here where oil is going back to, the highs up here. Um, Depending on the speed of things, that's always difficult. But again, we could see something like this, right, where we go to here and then we start to consolidate for some time. And during that period, the companies within will do really well. They pay a hefty dividend. Some of them at least 5% plus 10%, maybe even 15 sometimes. But they are at minimum paying 5%. So you are basically getting the inflation, back just from the dividends while you hold it. So again, oil here looks incredibly ready. And as I said, we need a crisis. The last time they did, the entire world was shut down over here. And what can they do here again? 77 is just a magical number. Um, I know everyone is looking at this right here, right now. And that tells me that maybe it will be delayed a bit, because if everyone is looking at it, then it won't happen at the time when people want it to happen. But it sure does look. I mean, it sure does look strong here. Um, but we will have to wait and see. One thing I will show you, it has nothing to do related with oil by any means. I just want to show you the platinum chart, just to show you that platinum actually is very correlated to oil. Not not as much lately, but if I can just, you know, you can see here that again, platinum is very, correlated to oil. This whole thing here, the platinum, consolidation here, same thing here for the oil. And again, prior to that, you had almost textbook price movements until basically 2018, where platinum underperformed, but still followed, oil to some degree. But the gains and drops were not, as one-to-one as it were prior to that. So again, a lot of charts will be coming up this weekend here, if we get the breakout, next week or like a week or two into the future, they will do really well. That is the USD WTI chart. We can also have a quick one looking at gasoline here. Again, showed it for members some time ago. Three impulses here. Again, minor impulses, I know. Internal break here, and again, gasoline is also on the move here, going at least here to like 2.3, which is also roughly, these low-hanging fruits you can see over here going back some time. Aligns perfectly with that trend line and the horizontal. I'm expecting it to tag, push back a bit, and then break together with oil, having a run. And then again, you have a 3-year whole fractal here breaking to the upside. Next target will be roughly 3. This whole supply and demand up here. So gasoline looks primed as well. Crude oil, light crude oil in this case, again, similar pattern to the USD WTI. Again, they are extremely similar. But sometimes you can get like an earlier signal on one of the in the crude chart or in the USD. But same thing here, we're actually breaking on the daily here. We're actually peaking our heads above here a tiny bit. Still extremely early, so let's see what the next few weeks are bringing here. But if we start to trade above, again, in this chart here, roughly the highs from there, so 78.5-ish, maybe let's call it 79, then again, we have a breakout. And yeah, oil should do really well. Last one here is the nat gas. This one here. Again, to me, I've been calling a long entry at $3 here upon that whole. Again, depending on how you're drawing it, this whole inverted head and shoulders. Target here is roughly $6. It's a tad higher, but I have my target at 6 here. Also because you're getting into a lot of, if I remove that, I'll make it white here for you. You can see the highs from over here. You can see this little pivot high there as well. A lot of internal resistance and support here at roughly 6.5. So that is where I think this measured move will hit anywhere between 6 and 6.5. Plus the fact that we're again back above this whole 10-year fractal down here. Again, extremely bullish long term, and yeah, gas looks really, really, really well as well. Together with oil potentially breaking out, energies, they sure look like they want to finally have a good go here in 2025. They haven't been doing much. Nat gas here basically going sideways for 2 years before finally doing something. Oil, it took 3 years before finally potentially breaking that wedge pattern. So yeah, energies is definitely definitely up there. And here we have the coal chart. Again, I think it will follow. We now have the 3 impulses here. We have one there, we have the low here, and we're piercing below now. So ideally, I was waiting for that whole thing here, this triangle, to break to the upside. That would have given a long entry at 152, but we broke down, now working on a potential double bottom at roughly 116. The lowest I think it can go before joining, again, if we get that breakout on oil, will be somewhere around here at 100. Equal level, triple digit, and you are testing that whole breakout there. So in my opinion, if we are going to come down to roughly 100 here, 101 basically, on the coal chart, that is a very good place to start, the entry for coal. Basically, that is a massive breakout with a massive, massive retest, and we should be grinding higher from that point on. So yeah, that is the energies. I think I wrote make energy great again. Again, we are seeing some good signs here still. And yes, energy and precious metals, they do follow each other one way or the other. So due to the inflation, right? So silver, gold, again, platinum, we just looked at that. They should fare quite well in a scenario where oil is doing well. So yeah, it is what it is, guys. Again, very exciting the next few weeks here. We might have to break next week. Again, we're having a weekend. We only need to gain like $1 here on the USD WTI chart, and you have the potential breakout. Preferred, we would like to have a weekly close above. Above that, wedge pattern on the USD WTI right here. Again, a weekly close will definitely be confirming it. Right now, we're just peaking. But yeah, what a moment here. And I think this is one of those where if you have a chart that's basically consolidating for 2-3 years and it breaks, these are the ones that have, again, 2-3 years worth of duration in them before hitting anything major. And you only need to hit 5 of these per year, and then only it again is difficult to find, but and you should do really well. So exciting times when it comes to oil. Will uranium follow? Yes, it is a part of the whole energy complex. We can quickly look at the uranium spot price here, basically still flagging here, holding the 2011 high. If oil breaks out, I'm guessing it will boost, of course, also uranium to some degree. And yeah, have an amazing day, guys. Again, if you like the content, you like and subscribe and all that. And if you want to have, the updates, you can subscribe to the YouTube or the Substack for the stock picks that we're trying to find here in the energy sector. So have an amazing day, guys, and a great weekend. Cheers. Bye.